What's good, y'all? It's Dcrypt back with another video, and today I want to go over like the new updated strategy that I've been using. It's been super consistent, and it really doesn't matter what you do to prepare because all you're doing is following price action, right? So with price action, obviously you always want to wait for the move, wait for volume, and I'm gonna show you guys exactly how we caught like a 250% banger, 150% banger, and yeah, let's get straight to it. All right, so first let me clear up my chart. First things first, you want to start on larger time frames. I'm going to show you exactly what you got to do. So as you guys know what an uptrend is, right? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You guys know what it looks like when the market starts shifting. That's when you break a low and start going into a downtrend from an uptrend. Same thing, vice versa, right? So boom, that's what we're looking for on larger time frames. So I don't trade off support and resistance, but I use them as magnets and I use them as pivot points, right? So on larger time frames, what's up, Mercy? On larger time frames, you see rejections here, right? So we have several rejections. That's a strong level there, right? So I would use this like as indication for a pivot point. Obviously, it's not going to be perfect like risk to reward. It might dip below and that area might consolidate. So I don't use them to trade, but I'll use them as magnets, right? So if we go from an uptrend and then break a previous low like here and then start making lower highs and lower lows, then I'll play the downside all the way up until we reach this pivot point is what I would call it, right? So I always mark the highs, like I'd mark this high here, this high here, which we've already approached, that high there. So I'll use this on the 4 hour, 1 day, or the 1 week. And so once we're in between these levels, say we break above 431, then I'll use 462 as a magnet, start playing the upside up into that level, right? Only if we break structure. So in here, we broke structure, we broke this high. So now that we broke this high here, I don't really need it there no more. I'll start marking the previous highs here. So that high, this high up here, and so on, right? So that's how I'll mark my levels. As far as support and resistance, super simple. If it's above that level, it's a support. If it's below that level, it's a resistance. I don't use them to trade. That's just the terms from, yeah. And let me show you guys exactly the trade that we took today so that way you guys can understand what it looks like, right? So once I have my levels marked, as you guys can see, I don't have anything on my screen. I don't have any indicators, nothing. Sometimes I'll use volume, but as far as that goes, I don't really use anything else, right? So I mark it open. Today's November 20th. The only thing I'm doing is waiting for price to make a move, right? So here you can see large volume. Compare these candles here compared to, previous candles. And 3 candles have covered a bunch of consolidation, right? So it's large moves there. On the 5 minute, ended up making a displacement, fair value gap, boom. And what you want to do is whether it goes to the upside or downside, I never have a bias. I don't care what news is out, what news is dropping, what's going to happen. I wait for market to make its move and then I follow. Price is always going to tell you what it wants to do, right? So let me dumb it down for you guys, right? We can't move the market. We can't move the market, right? Big money moves the market. So we wait on big money to make their decisions off of news, and then we make our decisions based off of big money, right? And that's just like in a nutshell, right? But this is market open here. This is the trade that we took. This is almost like a recap, but it's easier to explain. I trade this live every single day, so if you want to join the live, click the link below. You'll be able to join, whatever. But here, so we have a displacement there, right? It's a fair value gap. And it's based off, 3 candles. So obviously a lot of volume there. This candle doesn't touch that candle. And what happens is basically for every seller or for every buyer, there has to be a seller. So someone has to be selling their position in order for buyers to buy that position at that price, right? Same thing, vice versa. There has to be a buyer for every seller. Mercy, calm down. But and what happens here when there's so much volume to the upside it doesn't give the sellers a chance to push it lower, right? So buyers are in control. And when we recognize volume like this, you could always anticipate a retracement here for the best risk to reward. And since we're close to this 453 level on larger time frames, you know, like I said, you want to use those as magnets up here. Boom, you could target that level there, right? Because there's no previous highs besides there. That was a large sell-off there, and now we're approaching it. Obviously, we're breaking above, so we'll see what market does tomorrow. I can't sit here and say, oh, I think we're going to come down because we're at a resistance, or I think we're going to go up because we broke above, right? Price is going to tell us what it wants to do, so you always have to stay patient. Every day is a new day, and then boom, right? So once you have the setup there, you just have to stay patient. It can happen at any time during the day. I'll show you guys another setup that you could have taken if you missed out on this move. It's all about staying disciplined and just waiting for the setup to happen, right? So here you have your risk to reward. You mark that fair value gap, target previous highs there, and then stop out below the zone. Say you stop out, cool, whatever. Market starts pushing down, trade doesn't go your way. As long as you stop out where you're supposed to, then you could just play the downside and your risk to reward is fine. As long as you're using proper risk to reward, you know, if you're using like a 1 to 5, this is way higher than a 1 to 5. I don't even know what it is. It's pretty big reward, right, compared to your risk. It would take you maybe 10 or it'd take you one trade to make back 10 losses, right? So boom, that's your trade there. Same thing on QQQ. We have a 3-minute fair value gap here. This is the first market open candle. Boom. You could have simply just waited for the retracement. Obviously, we broke that previous week high. And then here, you could have set your risk to reward. Here, I honestly would not have liked to take this trade just because I would have to set my stop down here. And this looks like a 1-to-1. The risk looks a lot larger. That's why I played heavier on spot. But what you would do is you just go into a smaller time frame and stop out a low on a previous 1-minute candle. So that would set your reward, boom. And then you could also take that trade there. Super simple. Obviously, it went crazy, so there's several opportunity. But say you did miss this trade, right? If we're in an uptrend and we're approaching a resistance, don't try to fight the trend. Never, ever, ever fight the trend. This is where people mess up, right? So on the 3-minute, there's a fair value gap, right? So you see volume push in like heavy. After we make this move, it just starts moving sideways, and then volume just kicks back in out of nowhere, right? It's the same thing. It creates that displacement. Boom, you would set your risk to reward, and then obviously it would push higher. On this one, I probably would have just scalped it for a small, you know, base hit, rather than trying to hold it all day and just trying to catch that big home run. Because base hits add up. You could leave a runner and let that accumulate more profits. But when you see the market move, especially in the morning, you should be able to, you know, just be done in and out 30 minutes. Easy, call it a day, right? So super simple. But if I were to break it down, once again, always start on the larger time frames. Find the highs and the lows and use those as magnets, and then play in between. Look, 4 months of downtrend covered in 1 monthly candle. We're going to all-time highs again. There's no way that this market, you know, obviously, I mean, unless the world starts ending, everybody's going to sell their stuff. There'd be no reason to even hold positions. But market is always going to tell you what it wants to do. You can disagree with me as much as you want to, but I only listen to price, right? I don't listen to news. I don't listen to anything else. All that's just volume, buyers and sellers, and that's what we want as day traders, is volume. So boom, start marking your levels. Super simple, nothing too complicated. This is the strategy that I use every single day. A lot of people complicate it. They add this, sweeps, whatever. And I'm not saying that stuff doesn't work, but it, you know, it like clogs your brain with all these different things when it's all just right in front of you. Just look at price, wait on a retracement, get in, get out, call it a day, walk away, come back tomorrow. If the market doesn't give you the move that you want, then you just wait, right? But you can do this on any time frame. So like see here, November 14th, 15-minute fair value gap there. Boom. If you would have waited on the retracement, could have set your risk to reward. Target previous highs. Stop out below the zone. That would have been your trade there, and then obviously it smashed it, right? But you don't always want to hold the full position. I usually only leave runners all the way to, you know, my final target, which is previous highs, even on smaller time frames. You'll never catch the full move, and your goal or intention shouldn't be to catch the full move. Your goal is to make money, right? But you have to learn how to be a good trader to make money, and to make this an income, you have to be able to make money, but you can't do that without being a good trader, right? So super simple. That's all it is. Hope you guys learned from this. It's been Dcrypt. I'm out of here.